Hello, everybody. It is Saturday, September 11th, a solemn day. We will not make it solemn. We are going to make it exciting and fascinating as we discuss the markets and what's going on. This is the Plus3 Futures and Commodities show. My name is Ben Maldonado. I'm here with Barrie Hederachi. Hey, Barrie, how are you?
Doing good.
Can you believe it's been 20 years since 9/11? That is just shocking to me.
Yeah, it's too fast. In a way, it feels like a long time, but also it feels like just a few years ago.
No question about it.
Yeah, a lot of changes, eh?
Lots of changes in the world, in the markets, and everything. And so let's dive in on Bitcoin today to start, as usual. Interesting developments there. Last week we were very bullish and expecting it to challenge this half square, and the way things looked, it looked like we were going to be able to make it up and above. But as we've talked about numerous times, Barrie, a lot of times these guys will go up 1/8 and then reverse it, and that's exactly what they did.
And we were, expecting it to hold above the half square if it was strong, which it just simply couldn't do.
Could not do. Yep. So now it's not bearish, it's not bullish. We're kind of in a wait and see mode now, trapped between this half square and the full square. I think the next test is going to tell us a lot if we can come down and sit on top of this full square.
What's the level on that?
That's around 41,750 in that area.
Right. Okay.
If we can hold this area, it'll be bullish. If we break through and get stuck below, the next leg down could be starting, and this high up here could have some significance. So it's a wait and see. We're kind of in no man's land right now. Be patient, and let's wait for clues from the market as to what's the more probable outcome. I'm going to throw it over to you now to run through the big five, and then we'll come back and talk about some interesting patterns across multiple commodities that we picked up this week. There's the mini.
There it is.
A little bit of different price action after our cycle hit last weekend, huh?
Yeah. It's what can I say? It's pulling back for once.
Yeah. I mean, it's subtle, but there's a definite change in character that we've seen this past week. Whether it amounts to much or not, we don't know. We have to see what happens to price and these important levels, but definitely worth noting.
Right. And well, let's pick up where we left off last week. We talked about a couple of numbers, looking at 45, 55 to be resistance and sort of a target for the week, and 44.92 to hold in order for it to rally. So last week, we starting off Sunday night, 44.92 held, and we ran up into the 45.50 area, stalled out for a couple of days, and clicked over. Now, just to keep it simple, I would say, in the big picture, this 43.40 is sort of drop dead support, which is the 270 degrees up from the last year's lows. And for next week, I think we should hold above, if we can't get above and hold above 44.72, then we will probably see 44.20s in short order. So we'll post those numbers on the spreadsheet, which should be at the bottom of the description for this show. So that would be two numbers to watch next week. That would be, if we don't hold above 44.72, we're probably going to go down and test 43.20, which would be actually right in there. I'm sorry, 44.20.
Right in your full square area, right?
Right about in here, which, right above the old consolidation here, right?
Mm-hmm.
And if that goes, then we're right down to 43.40. There's nothing in between those things. So, hey, so keep that in mind. And that will be a quick move down to test that. And if 43.40 goes at some point, then I think we're starting a new phase for the market. So buying the dip might be over. So we got to keep that in mind.
Yeah, and looking at my notes for this week, I saw that both the monthly and weekly resistance held and turned us down for now. So I'm watching that to see if anything major comes off of that.
Yeah, I think we get used to these rallies, so that's the thing. But I think keeping an eye on these levels would help get things in focus. And we still have this, very strong trend lines holding. So we'll see how it goes. But those are the key levels to watch. I don't think we have to look at weeklies, but let's just take a quick look. Actually, we should talk about it.
So your weekly resistance held as well.
Yeah, well, the deal here was, for the trend to continue in the bigger picture, we really needed this 144 to hold on any kind of a retest. And clearly we didn't hold, and we actually just slid right past it. So that also is an indication that, we might be in for a little bit more of adjustment than just buy the dip and go. Mainly because it's at a key level, which is at 144. And so even on the weekly, you can see that 43.50, 43.48, that's the level to watch. And looks like we might be breaking this strong slope. So let's just keep that in mind as we go. All right, going on to bonds. Last week, we talked about how 62.08 was support. We were looking for it to hold. But overall, the block that we colored out to be sort of a chop zone, kind of a sloppy sideways action, which we're getting so far. We broke the triangle. It takes out the bullishness out of it. And now 162.08 is really the level. And I would say, if we take out the low from, it doesn't even have to be the low on the 7th. If we take out the low on the 8th, which is around 61.25, I would say bonds are in facing some weakness, and we might get to see 159 area in a hurry. So just keep that in mind. If we take out this low on the 6th or 7th, that's super weak. In the meantime, 162 area, we're looking for it to hold. If it doesn't, it's very easy to tell because we're right there. It's within a few ticks. And go into the weekly bonds. Again, on the weekly, we do have a trend line that's set up already from the old lows from last year. Well, not last year, earlier this year. And strong support at 160.10 area. So that's something to keep in mind.
I'm going to talk briefly about bonds because it has a pattern of a lot of these commodities that I found interesting, and we'll discuss that when we flip it over.
Yeah. So between this 59 and 60, that's looks like that's the next support if the 62 area gives out. But so far it looks weak, and especially I would say it's going to be very weak if this the lows last week is taken out. So moving on to crude. We looked at a couple of numbers last week. We were looking for 66.75 to hold, which it did, even with a little bit of air to spare, and 69 to be resistance. And if we take out 69, looking for a move up to 79. Basically, it held, we were just pushing up against 69 all week, and that was that's pretty much it. We also have a trend line coming down. So once that break, looks like it could spring right up into 79. If it doesn't, I would expect it to sort of work between the 67, 69 range for the week.
It's tight range last week. The
Very
buyers, the buyers were buying it at a certain level and sellers were selling it at a certain level. They really squeezed it in.
Yes, and the levels held. And to the downside, if we take out this trend line and especially the 67 line, then I think we might go back down to check the 60. But we're, it looks like it's holding fairly well, and 69 is a key level to watch to the upside.
Mm-hmm.
On the weekly chart, we can see we're just up against the 7/8. It's just a matter of getting above it, which is really getting above the 69 level that we talked about. So that's a fairly simple operation there. Gold, let's see. Well, same numbers, sort of a quiet week in a way. We left off at 1832 being a key level, and that, for it to go higher, we really need to clear that. And you can see last week, we just couldn't do it. And the sellers came in and came right into our support level, which was 1789.
Mm-hmm.
And the entire week was between the two levels that we posted. For now, I would say, gold's in a good spot, long it is above 1789, 88, this level. I would make a note to say, I think the low on the 8th is a key level right now. So that would be 1783. If 1783 gets, which is the low, and that's exactly the line we have here on the square. If that low gets taken out, other than a short, 2-second false break or something, if we gets taken out, I think gold is probably going to go back down and test the half square around 1735, 36, which would also be the lower side of the fork. So the key level to watch, I would say, we have these numbers, 1832, 1789, we already know about, but I think the number to watch next week would be the 1783 for any kind of weakness. And on, the other side of that same coin would be take out the high on Friday, which would be 1806. I think we could expect another run up. And on this one, it's the fourth run up, we probably take out the 1832. So those two levels between Wednesday and Friday, Wednesday low, Friday high, I think is a very two good levels to watch going into next week. Here's the weekly gold. We're still, we drew up that little triangle. We're compressing in there, and we're also inside of the little box that we call it in. So on the bigger picture, we're sort of backing and filling, holding about this key level on the weekly, which would be 1766, right? Not to throw a bunch of levels out there, but this is on the weekly, 1766, and I'll put that number in on the weekly column on the spreadsheet.
Gold is one of 8 commodities, I was just counting them, that are in this sort of bullish consolidation / correction mode that we're going to review. So it's got the pattern, and you'll see they're different. They're all 8. Some of them are early in it, some of them are later in it, but they're all sort of getting ready for the next move up. It's sort of jiving with the cycle change that we've experienced.
Yeah, I mean, on the weekly, the key thing is, look, we didn't really take out the 52 level on the square, and buyers keep coming in here supporting that level, right? So it's not exactly bearish. So I would look at this as some kind of a big picture consolidation, and then on the bullish tone, right? Look at the old highs over here, 2011, 12, they're right in there, and comfortably, right? Getting comfortable at that level. So
agreed.
That being said, watch these levels that we just talked about for next week, because they're going to be active.
And there's always a flush. Well, I can't say always, almost always a flush before they make the real move. So we got to watch for that.
Yeah, well, I thought this was that flush and expected this to run up and test these highs.
Mm-hmm.
Well, on the way we got stalled at the 1832 level, so we'll see how it plays out.
Sure.
But I think next week could work out if one of the other levels get taken out. I think that would be the key. We'll talk about it next Sunday or Saturday. Looking at the dollar. Last week, we drew up this box. We're expecting any kind of a down move to hold above that, which we did. And then we wanted to see the dollar take out this 92.55 if it was going to rally up and go challenge the old highs. And lo and behold, we kind of stalled out at the level 92.55, been kind of crisscrossing it. But it's staying afloat. So again, I think this Thursday, Friday bars might play out. It was a little bit of a pivot in a lot of markets. So I would say if we take out the Wednesday highs, there's a good chance that we rally off of that. And if we take out Friday lows, we're probably going to come back and test the trend line or the lower boundaries. But 92.55 is the key level to watch. Not much to talk about because we're sort of stuck in this area for a couple of weeks. But the thing is not to fall asleep, right? Because big moves come off of those. Looking at the weekly, not much. You can see, a couple of months we're stuck in this range. So it's really the daily and the shorter time frames that can give us some insight. Let's see. Yeah. Really, this is the line that's sort of being held.
Mm-hmm.
If that can hold, I think dollars in a strong spot. So we'll see. And the euro daily pretty much worked out like we thought. Half square was resistance, and we expected it to drift a little lower during the week, and it drifted a little lower. And probably going to hang around here, maybe drift a little lower, test the trend line, but till the dollar figures itself out, it's probably going to hang around here. I don't see anything strongly bullish. I think, if anything, a little bit of weakness into check these lower boundaries, maybe the lows over here. From July
as you were talking, Barry, I was thinking you were saying, the dollar's testing a trend line. I was thinking all of these markets are testing our patience as traders. There's these consolidations and these sort of back and forths and triangles, and they're building to a break. All the different markets we can see this in. So, knowing the levels and being patient and waiting for the move to show itself is what's our job right now.
Yeah, it's all a waiting game, right? Like fishing. You just have to just wait and see what happens. So, yeah, be patient. I was just thinking that, the key thing is not to fall asleep when the markets are sort of backing and filling and adjusting. So that's the key. Mm-hmm. So looking for euro to kind of be in this box, maybe go a little lower towards 1776 level next week. That's all I got. I think we covered everything. Hey, I have that. Didn't you mention Apple before we got started?
I did. We were talking about Apple because that court ruling came out and kind of shook Apple up a little bit on Friday. And Apple and these, 3 or 4 big cap tech stocks have been holding the entire market. And we were talking about that. So what did you see in Apple?
Well, that's why I got a little late today. Pulled up our old Apple chart to take a quick look.
Right.
So here's a weekly Apple chart, and lo and behold, here we are at 144, right? And this is coming off of 2013 lows. and we pegged that pretty well. I mean, it's fairly close enough. And what we have is it's a weekly chart, and we have an outside reversal, and not to be taken lightly. So I think this should be watched, especially since it came in at a key level, which would be the 144.
And you got the timing right. That's a really good square. Right.
Yeah, the square is good. I mean, if it was right on the 432 bar, it would have been great. But this is how they work in reality. They always go off a little bit. That's fine.
Right.
But it lines up from a couple of different points, and so I'm comfortable with the square. Especially here, we went half square. That's what I was looking for. See, half square there.
Mm-hmm.
And the other interesting thing I saw was, we have a pretty clean 3 drives to a high here.
Yep.
And on a weekly, those are deadly, and we have that. So I think regardless, court ruling was just sort of the garnish. So really, this is what's been working, in the background.
Mm-hmm.
And there's also, when you get 3 drives, it's nice to see if you have a relationship to sort of solidify the count. And here it just turns out that there is a arithmetic relationship here that
looks like 2/3, 1/3, huh?
Well, it's actually 150%, 1.5. So this is 150% of the initial 2 highs, right?
Nice.
So basically, it's high to high times 1.5 gives you this. And that's a nice, it's really nice to have that when you have a pattern like a 3 drive pattern. And, sometimes it's 618 and all of that. Not that we look at a lot of that, but I just happened to just see it. It looked like it. So I punch in the numbers and wow, there it is. So I think we could have a fairly significant high and in Apple.
And this is no run-of-the-mill stock. Apple is one of the largest weights in S&P and these major indices. So, and the QQQs and NDX, it's pretty significant.
So I think for people watching this, I think 145 is sort of the drop dead level to watch next week. If we don't hold this, somehow 145 slips through, then I think we have a longer term thing going on, which is going to last more than a week, right? Let's say several weeks on to several months. But 145 is the level to watch next week. All right.
Great, good work.
Yeah, thanks. So that's good support. Also,
important stock.
All right, let's put it back to you.
Okay.
Oh yeah, natural gas.
It's been a heck of a ride with natural gas.
Well, Ben, I don't know if everybody knows this, but I remember you calling this out way before anybody even felt the chill.
Yeah. Well, it's what it is what you and I've been talking about, which is you listen to the message from the charts, right? And when you get a significant monthly breakout, which we got, you pay attention. And that's why we started talking about it down here when we got that monthly breakout, right in this area here. This, we're putting it up and looking at it, not to say, oh, look how great we are, look what we did. It's more of, this is what we try to catch. All the tools that we use, all the scanning, all the monitoring of the charts, you want to get these kind of moves. And the way you catch these kind of moves is by staying on top of it, watching those boring consolidations, those boring sideways moves, the congestions, and figuring out when it's moving out of that phase and into the next phase. So things still look very bullish. I mean, this is the daily, obviously, which has made a hell of a move. But on a monthly and weekly basis, we're probably not even halfway through the game here. So,
but on the daily chart, though, I think we bumped into some resistance up here, right around that that square up there.
Yeah, the 510 is the square, and I agree. We may make another push up to tap it or exceed it a little bit, but I agree with you. I mean, when you start going, vertical like this, it it's time to tighten things up. If you got options, you take profits.
Exactly.
You do things to just sort of protect your position while still trying to stay in and capture the bigger picture moves, sort of the monthly and the weekly basis.
Right.
But
that 510, 505, 510 level is important, I think, for anybody following this.
I agree.
Watch. All right.
Let's go to the next one. So we've already talked about Bitcoin. What I wanted to do was touch on NQ and ES quickly. NQ, we've been watching these levels. Last week we showed on,
and that half square should be a full square.
Yeah. And it is on the monthly and the weekly. It's a full square.
Yeah.
So it's really strong resistance there. We turned down sharply. A test of this full square looks to be in the cards. We'll see what happens. But that's a pretty significant failure up there with multiple tries, like over a week up there. So 15,125 area could be coming in the next week or two as a test. And even if it does come down and sit on top of it, it's still bullish. This isn't a call for a crash or anything, but we should see some correction, consolidation in NQs now. ES is a similar picture for me on a daily basis. We were up above this full square here at the 4480 area. Looked like we were going to sit on top of it on Thursday, and then Friday we smashed right through it. Same trend line you had drawn, Barrie, is obviously the next important spot. Got to hold this trend line, or we could be looking at a deeper pullback and a deeper type of correction. So for me, 4480 is an important spot. If we get stuck below that, we can expect weakness. If we can sit on top of that, we should be off to the races again. Let's check out bonds with an introduction as to this pattern that I'm seeing. You're going to have to edit this out. I can't get this damn thing to move, right?
That's all right. Can you hear all the birds?
No, not really.
Okay.
So here's the 30-year bond. And I'm introducing this one with a set of other commodities where we have a similar pattern. And the pattern is this bullish wedge, which is been going on for months in these different commodities. You can see here in bonds, we've been, since early July, we've been, banging up and down against this channel. And the reason this channel is bullish is if you look to the left, and in these other commodities, you'll see similar, we made a nice move up, and we've been sort of consolidating for months in a sideways downward tilt pattern, but still staying on top of the move that preceded this particular consolidation. So there's a bullish consolidation. Actually, I have these stupid things on here. I thought I cleared those out. Can you pause it for a second?
Hold on.
So here's the 30-year Treasury. The reason we're introducing this one and the next 8 charts you'll see all have a similar pattern. It is a bullish wedge or bullish consolidation that's been taking place for months after a move higher. So all of these, I believe, the probabilities favor are forming sort of a bullish pattern that's going to break to the upside, where probabilities favor will get some sort of break to the upside once it's done. Some are further along than others, but hopefully you'll see the similarities in the pattern. So here's the treasuries. We made a high in July. have been consolidating with a downward tilt. This past week, we made another hit on the bottom trend line and bounced. We want to see it, if we want to see the odds go higher that we're actually going to break out to the upside and break through this top channel, we got to get on top of this this square, which is the 63.17 area. So as long as we can stay in this channel, stay on top of this structure over here, I believe we'll see a bullish resolution to this consolidation. Doesn't preclude the possibility, as Barrie said, that we break through here, maybe even come down and test this half square, which is around 160. It's possible it could do that and then make its move higher. But this is the pattern that I've noticed that I want to point out so you all can see it. Let's go next. We're going to go look at the grains, because the grains have a very similar pattern. So here's beans. Beans had the strong move up late last year into May. We've been consolidating since, and now we're in this sort of terminal wedge, this bullish wedge pattern, where it's narrowing. We're pulling back. Once we can break through this upward trend line, I think the next leg up in beans will start. Right now, and you can check the spreadsheet for all these. We'll post the link when we post the link for the full video. 1296 is where resistance is. Support's down here at the full square. But this looks like we are getting close to the end of this consolidation. No need to front run it or try and jump in here until we see, evidence that the downtrend line is broken and that we've, moved up and are sitting on top of support. But I wanted to be on your radar because beans looks like all these other commodities that are at the terminal stages of this correction. Let's go take a look at wheat. Here's wheat. Wheat's been the strongest of the grains. As you can see, we're just now pulling back off of the highs for the run, but a same sort of falling wedge pattern. Wouldn't be surprised if we came down into this support here at 670 area, 668 area. Once we break through this upper trend line of this consolidation, that's when we're going to look to start getting involved again and position for the next leg up in wheat. Similar pattern with corn. We corrected off of the highs in May. We're in this bullish sort of terminal wedge. We had some action off of the crop report on Friday. Still think we're chopping around here. We want to see it move up, sit on top of this important support resistance level in the 520 area, and then we can have higher confidence that corn is ready to move up again with the next leg higher. What are your thoughts on the grains, Barrie?
I'm following along. I think that's about right. We had we're kind of in the I would say the expected termination of a correction. Mm-hmm. It runs around 90 days, so we're right in that time window. And I think this is the thing to do. You start watching the levels to see how we do the structure.
Absolutely.
Yeah.
Another one that's in the pattern, and you can see it's in a different stage than the grains or even the 30-year treasury, because we actually have broken out of the channel. But again, it's the pattern that I want to notice and a pattern I want to see. All of these commodities are doing this for a reason, right? They all moved up earlier, different phases, different stages. Right now, there's some of them are starting to end and break out of these consolidations, gold being one, right? We had this pattern since the beginning, since May, late May, early June, lower highs, higher lows, holding the channel. Here was your sort of clean out move in gold that we saw that one morning when it was down big. We've now broken out of the upward part of the channel. We did bang our head up against the full square resistance in that 1635 area. Now we've come back and we're sitting down on top of the channel here. So watching gold, it's further along than the grains, but this one needs to be watched because it's starting to signal that this corrective phase may be ending and a new phase could be starting. And that phase would be, a strong move higher to ultimately take out these the all-time highs we saw last July, July 2020. So that's gold. Copper is another one that looks really, really good. It's the furthest along of the commodities, and I think it's kind of the one that's going to signal what we're going to see out of the other ones. Copper made an all-time high in May, has been correcting since, and then Friday we made this powerful move up to the top of the channel that went through this really strong resistance that we had in this 433 area. I believe we're probably going to check back a little bit, maybe pull back and check the top of this here. If we do, and we can hold on top of that, I feel like copper is set to move strongly higher in the near term. This downward sloping trend line obviously needs to get broken, and I think probabilities favor if we can sit on top of this here, that this next push will get us through there. You've been looking a little bit at copper too, Barrie. Where are your thoughts on with copper?
I'm on the bullish camp. I think it was a good call to watch for support at that full square. And long as that holds, I think trend line breaks. I think we're ready to go.
Yeah, this is one to keep a close eye on because it's further along than the
others.
The
levels are important to watch on these, so we know where the balance is.
Absolutely. Another one we want to watch, we've been talking about it, Barrie highlighted it in his big five, is crude. Notice the pattern. Again, made a high. This one made a high in July. The others were high in May, so it's a little further behind in its, time-wise in its consolidation. But again, it's been consolidating with a downward slope in this bullish wedge. This past week, we tapped the top of it. Now we're stuck in this little range here at the top here. Wouldn't be surprised to see it pull back a little more after the hit on the top here. But if we can get through the top of this channel and then this square, which is at the like 70.65, 70.68 area, you're looking at minimum half square here, which is 75, but more likely new highs as the next leg up goes, in the upper 79s to 80 range. Crude looks very bullish. We just got to wait and see, how it's going to finish up this consolidation. Are we going to pull back to this half square? Or are we going to go right through the top of this channel and challenge the upper square? Either way, crude looks bullish. We just got to stay on top of it and be ready to go when it breaks. So that's the pattern on the commodities. I showed 8 different commodities, including the 30-year bond, the grains, gold, copper, crude. They're all in this wave structure of close to or ending their corrections. So I think we got to stay on top of it, especially with the big cycle change we had last week. We've seen that start to manifest in different markets. But the commodities are in different stages, are getting ready for the next leg and the next move higher, I believe. What's your sum and big thing you're looking for this week, Barrie?
Well, follow through mainly.
Mm-hmm.
Trying to see if the market follows through, and also gold and bonds are in critical places along with crude. So just looking to see if we can take out these levels we've been consolidating next to get some follow through. Yeah. I think we've done. I'm getting a little bit bored of all the sideways. So
fortunately, it looks like it's coming to an end. I think we're in we need to really closely watch levels, focus on the markets that are in a position to move, and I think we've highlighted the ones that are in different phases of ending these consolidations. So keep your eye on the levels. They're in the spreadsheet, and best of luck, because the action is kicking up again. It feels like we've shifted.
Sounds good.
All right, we'll see everybody next week, and have a good week trading, and keep your eyes on the prize, because the things are starting to move.
All right.
Take care,
Thanks, Ben.
Barrie. All right.
Okay, thanks, Ben. Bye.
Bye.